Hi everyone. SoFi Management held their fourth quarter 2022 earnings call with investors on January 30th. So I went through to pick out the really big themes, the highlights from this earnings report, and I really went through and I did a deep dive into it and I pulled out what I thought were the biggest things that I thought you should know from it. So let's go into those details. Let's see what's going on with SoFi stock, starting with the CEO Anthony Noto talking about that they grew their deposits 7 times to 7.3 billion from 1 billion over the course of the year, really powering the cycle. They grew their members by 1.8 million to 5.2 million members, nearly 9 times their size in 2018. So this company is experiencing really phenomenal growth that really there was fuel put on that fire when they got their bank charter. That really boosted their growth even further, bringing in these deposits from customers, signing up for direct deposit. And we'll see later on, SoFi offers industry leading APY rates, and that's attracting even more customers. So if you're looking at the progress they're making, really good progress in terms of customer growth, in terms of deposit growth. So he goes on, importantly, our NIM stands for net interest margin, revenue is meaningfully greater than our directly attributable lending expense of 106 million. So what this means is that SoFi is paying money to attract customer deposits, right? They're advertising a certain annual percentage rate if you open a checking account, a certain annual percentage rate if you're opening up a savings account, and so that's an expense for them, right? That's an expense to get the money, and then on the other hand, they're lending out that money. And so this is the business that it's essentially in. That's the core of the business. How much is it going to cost for SoFi to attract money? How much does it have to pay for money? And then how much does it lend the money for? And depending on how good it is in this regard is going to depend on how profitable the company is. I know they talk about a lot of different stuff, but this is the core of the business. Attracting deposits at a low cost, lending those deposits out prudently, and doing a good job of that. That's what a bank does. SoFi is at the core, it's a bank. And so this is what it's in the business in. It's lending, it's attracting the customer deposits. So it's good news to see that it's getting better in this regard. Another big item to come out of this earnings call was this description here that in 2023, they expect to achieve quarterly positive GAAP net income by the fourth quarter. This is GAAP net income, right? So I usually ignore when companies talk about adjusted EBITDA and adjusted of this and that because those are not GAAP figures. These are not generally accepted accounting principle figures, right? These are adjustments that the company makes to show you, the investor, something that makes them look better, right? So they make these adjustments to and then show you, look, if you look at our adjusted figures, look how great they look, right? So I tend to ignore those. I place a significantly smaller weight on those figures that the company wants me to pay attention to, right? Because as an investor, I want to be prudent with the money and I want to be prudent with what I recommend to my clients and my viewers. And I'm not going to give you the rosy projections that management wants me to give you, right? I'm going to give you what I think is really going on. And so when management says positive GAAP net income, that's a really big deal because this is no adjustments. This is just straight out profitability in the fourth quarter of 2023. That's really good news. So if you're investing in SoFi, thinking about investing in SoFi, this is really good news. The company is going to be profitable on the bottom line by the fourth quarter. So this is, again, this remains to be seen. It's not absolutely certain that this is going to happen, but I don't think management would say that they're going to be positive in the fourth quarter in terms of net income if they weren't significantly confident that this was going to be the case. So really good news from this standpoint, because that's been the really knock on SoFi's business is not the growth, right? They've been delivering excellent top line growth, revenue growth nearly 50%, significant customer growth. You saw the numbers for deposits and customers, product growth, and all of this. Really good job with all of that. The knock on the company as a stock, as an investment, has been the profitability. And so if they can turn this quarter, that could be a big change in the stock. Okay, so moving on, their strategy is to continue to play out with SoFi Money, which allowed us to surpass $7.3 billion in deposits, which was up 46% from the previous quarter. Really, really good growth. And saving 190 basis point on cost of funds versus other sources of debt to fund loans. So that's big news there too. So let's double click into this. And this goes to what I mentioned earlier, the net interest margin, right? So what I said, what they do, they pay money and expense to attract money, right? They pay for money. That's their cost of funds. And then they lend out the money. So if their cost of funds is decreasing, that's going to make it easier to make a profit by lending money, because now their cost is lower. So they can make their spread is increasing when their cost of funds is decreasing, right? It's like if you're in a manufacturing business and your cost of goods sold is decreasing, it makes it easier to turn a profit. So this is good news there. They added 487,000 new members in the fourth quarter of 2022, which brought their total member base to 5.2 million, which was up 51% year over year. Again, they're doing an excellent job with growth. Growth is not a concern for me with SoFi stock right now. I will start to pay more attention in terms of growth when the interest rates start to come down. I want to see if SoFi can continue to attract customers when interest rates are at 0 and 1% if they were to fall to that level, because they're attracting a lot of customers because of that high APY rate, right? People are coming to SoFi because they're earning a lot more money on their checking and savings accounts, whereas Bank of America is like close to 0% if you're leaving your money in a checking account or savings account at Bank of America. So they added 700,000 new products, ending with 7.9 million total products. Of these new financial services grew by 60%. So really good job growth there. So let's get into their personal loan performance more than offset the lack of demand in student loans and refinancing, less robust performance of home loans. So this part of the business I find to be riskier, right? Personal loans is usually folks consolidating higher interest rates, credit card debt and all of that. And still these personal loans come with no collateral. And when there's a downturn in the economy, people lose their job. These are the first types of loans that they stop repaying, right? They're not going to stop repaying their mortgage. That's going to be the last one they stop repaying, because if you stop repaying your mortgage, you might get your home foreclosed. You might get evicted. So you're not going to stop paying that. But if you stop paying your personal loans, you're not going to lose your home. You're not going to lose your car. All that's going to happen is your credit score is going to decrease. So if you're choosing as a customer, you know what, I just lost my job, I've got all this debt, which one do I pay? I can't afford to pay all of them. The first one that you're going to stop paying is personal loans. So this is riskier for SoFi to be growing in this segment rather than growing in home loans or student loan refinancing, where those are student loans. Of course, if you don't pay, you can't write that off in bankruptcy. And so that's another one that's a little bit stickier in terms of customer repayment than the others. All right, so I'll finish with this last statement here. In the fourth quarter, the difference in their deposit cost of funds and warehouse cost of funds was approximately 190 basis points. It was 125 basis points in the third quarter. So what I talked about earlier, that spread between the cost of funds and what they're earning, lending it out, is increasing. That's great news. That's what you want to see if you're following SoFi stock. This is an important metric to follow. I always look for this metric, and it's great news that it's growing. It went to 190 basis points. It was 125 basis points in the third quarter and just 100 basis points in the second quarter. So it continues increasing. This is great news. This is great news. So this is what I would continue to pay attention to with SoFi stock. Overall, an excellent quarter, a lot of good news. The highlight being that it expects to be profitable by the fourth quarter. So this overall is a great quarter for SoFi stock. I hope this gave you some insight into what's going on with SoFi stock. All right. Thank you for watching. I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.